widely tracked benchmark index reflecting the strength, the resilience, and the growth of India's leading companies and the broader capital markets. Today, we are honored to have with us distinguished dignitaries, our leaders from Nifty50 companies, representatives from asset management companies, and key stakeholders of India's financial ecosystem who have contributed immensely to this remarkable journey. Thank you all once again for being a part of this important milestone. Ladies and gentlemen, to begin this program and to set the context for today's celebration, it gives me immense pleasure to invite on stage the Managing Director and CEO of NSE, Shri Ashish Kumar Chauhan. Can we have a huge round of applause for Sir, please, as I invite him on stage. Shri Ashish Kumar Chauhan, may I request you to please come on stage and address this august gathering. So very warm welcome to you.
Honorable Chairman, NSE Shri Srinivas Injeti, distinguished leaders of India's leading companies, respected heads of asset management companies, members of the Nifty50 family, colleagues from across the market ecosystem, ladies and gentlemen, good evening. The story of modern India's capital markets can in many ways be told through the evolution of NSE and its flagship index Nifty50, often described as a stock of the nation. This year marks an important milestone, nearly 3 decades since the launch of the Nifty50, and it is fitting that we gather today to recognize the leaders of the companies that have shaped this journey. Today is therefore not merely the anniversary of an index, it is also a reflection of 3 decades of India's economic transformation, corporate evolution, and growing investor confidence. To appreciate the significance of the Nifty50, it is useful to recall the context in which it emerged. In the early 90s, India's financial markets were undergoing a period of important structural reforms. With the establishment of the National Stock Exchange in 92 and the introduction of electronic trading by NSE in 1994, India's equity markets began a transition towards greater transparency, efficiency, and nationwide accessibility. As markets modernized, there emerged a clear need for a transparent, rule-based benchmark that could represent the performance of India's leading companies and serve as a reliable reference point for investors. In the beginning, we had launched NSE 100 almost within 15 days of starting NSE's equities market. And later on, in April 96, we launched Nifty50 with a base value of 1,000 and a base date of November 395. The objective was simple yet powerful, to create an index comprising India's largest and most liquid companies that could act as a credible barometer for the country's equity markets. The pace of India's economic expansion has also been reflected in the index's trajectory. After taking over 2 decades to cross the 10,000 mark, the Nifty50 crossed 20,000 in 23 and 25,000 in 24, reflecting the accelerated growth of India's corporate sector. Over the past 3 decades, the Nifty50 has grown alongside India's economy. The market capitalization of Nifty50 companies accounted for around 42% of the total listed market capitalization at the time of the launch. This share rose to nearly 65% during the global financial crisis and currently stands at around 43.6% as of February 27, 2026, indicating the continued significance of the Nifty50 within India's listed equity universe. Over time, the index has become the foundation of India's index-based investment landscape. The Nifty50 today accounts for nearly 50% of total assets under management linked to index strategies with an AUM of 4.7 lakh crore as of December 2025. More broadly, NSE indices together account for about 73% of all passive funds AUM in India. I recall in 1995, when we were making the Nifty, I wrote to SEBI that we are going to launch this index and we'll have derivatives on that. And that time, O.P. Gehrotra, who was the director of SEBI, which is now equivalent to WTM, he called me and said, Nifty50 is not a good name. And I said, sir, on what basis you are saying Nifty is not a good name? It means clever. And he said, no, there used to be Nifty50 companies in America in 1960s and 70s, and then they came down. So Nifty50 euphoria is considered bad in America, so you don't give it the name of Nifty50. I said, but it's a 50-share index, and everyone has started calling it Nifty50. So even if we don't call it Nifty50, and that's what happened, we started calling it NSE50, but people called it Nifty50. And so that's how ultimately people's voice counts. Whatever we want usually doesn't matter. And so there are many, many stories of Nifty which comes to my mind when I kind of think of this important barometer, which has now become part of our life. Now, when you are in class 10, what was Nifty? When you graduated, what was Nifty? When you got married, what was Nifty? When you had first child, what was Nifty? So Nifty is something you look at when you wake up. Nifty is something you look at when you go to sleep and probably in your dreams, right? Today especially, given the fact what has happened. So Nifty is there in all our dreams and all our waking life, and that's what it has become. And the breadth of sectors represented has also shifted markedly between April 96 and February 26, with financials emerging as the dominant sector, rising from 21.3% to 37.7%, and information technology from nil to 8.8%. In contrast, larger sectors such as materials and consumer staples saw notable moderation, reflecting the changing structure of India's equity market over time. Overall, the index has moved from being relatively materials and consumer-led in mid-90s to becoming more financials driven and diversified, mirroring the deepening of financial markets and the rising of importance of services-oriented sectors in the economy. From an investor perspective, the journey has also been notable. Since inception, Nifty50 Total Return Index has delivered annualized return of 12.7% in rupee terms, helping create long-term wealth for millions of investors. Over this period, the index has delivered positive returns in a large majority of calendar years, reflecting both the resilience and structural strength of India's corporate sector. But beyond returns, the importance of Nifty lies in the ecosystem it has enabled. In that sense, the Nifty50 is not merely a market indicator, it is an institutional bridge connecting India's savers, its enterprises, and global capital. At the same time, the derivatives ecosystem linked to the Nifty50 has expanded significantly, contributing to market liquidity, risk management, and price discovery. Of course, the journey of the Nifty50 has not been linear. Over the past 3 decades, the index has navigated multiple business cycles and global shocks, from the dot-com collapse in early 2000 to the global financial crisis of 2008, and more recently, the disruptions associated with the COVID-19 pandemic and evolving geopolitical uncertainties. Each episode brought periods of volatility, yet each time, markets demonstrated resilience and the ability to recover, reflecting the adaptability and strength of India's corporate sector. Today, India's capital markets have expanded significantly. As of February 26, the market capitalization of companies listed on NSE now stands at 450 lakh crore, or about $5 trillion, reinforcing India's position among the 4th largest capital markets in the world. At the same time, investor participation has broadened from a couple of millions to now 12.7 crore unique investors, and one in every 4 households of India have exposure to capital markets, reflecting the increasing financialization of household savings and deeper engagement with formal financial markets. Participation today spans 99.85% of India's PIN codes. Only 28 PIN codes don't have NSE investors out of almost 19,300 plus PIN codes. Since April 2020, rising equity participation has contributed to an estimated 57 lakh crore increase in household equity wealth, highlighting the growing role of capital markets in India's financial ecosystem. Women now constitute 1/4 of all investors, reflecting the growing democratization of equity markets and their emergence as an important instrument of household wealth creation. Within this expanding ecosystem, the Nifty50 continues to serve as an important anchor, a transparent, rule-based benchmark trusted by investors, institutions, and policymakers alike. The leaders present here today have played a central role in building and strengthening this ecosystem by creating globally competitive companies, maintaining high standards of governance, and delivering value for shareholders over a long period of time. You have contributed not only to the success of your respective organizations, but also to the credibility and depth of India's capital markets. As India moves forward on its long-term development journey, the role of strong, innovative, and well-governed companies will remain central to sustaining growth and attracting global capital. The Nifty50 will continue to reflect that journey as a barometer of India's corporate strength and the confidence that investors place in the country's economic future. Today's felicitation, therefore, recognizes both the achievements of the past 3 decades and the leadership that will help shape the decades ahead. On behalf of the National Stock Exchange, I extend our sincere appreciation to all the leaders present here today for your contribution to India's corporate and financial ecosystem and for the role you continue to play in strengthening India's capital markets. Thank you. Jai Hind.
Thank you so much, sir, for setting the perfect tone for today's proceedings. And I request you to please be on stage for the very, very special segment. Ladies and gentlemen, the Nifty 50 index represents the vision, the resilience, and innovation of India's most influential companies, which have shaped our nation's economic journey. As we celebrate this remarkable journey of the Nifty 50 index, we now take great pride in felicitating the distinguished companies that collectively represents the strength of India's corporate landscape. I would also at the same time request the dignitaries joining sir on stage. Please help me in welcoming on stage the chairman of NSE, Shri Njeti Srinivas. Let's have a huge, huge round of applause for him, please. Joining them, we have Shri Anirudh Chatterjee, the MD and CEO, NSE Indices, Data and Co-Genesis. Let's give a warm welcome to sir, please. Very, very warm welcome to the dignitaries. Ladies and gentlemen, let me tell you, for the purpose of the felicitation, we will be inviting the companies in a sequence aligned with their market capitalization, purely to felicitate and facilitate the smooth conduct of the ceremony. Also, the kind request to all the companies' representatives to please exit from the right-hand side. Also, we have a wonderful team there who will wrap up the mementos. Also, when it comes to mementos, we have designed this very, very special mementos for you just for this momentous occasion as an ode to the celebration of 30 years of Nifty 50 index. All right, without further ado, please help me in welcoming Reliance Industries Limited. Can we have a huge, huge round of applause? I request representatives to please come on stage. Very, very warm welcome to you. At the same time, I also request representatives from HDFC Bank Limited and Bharti Airtel to please be on standby next to the stage. Ladies and gentlemen, I do understand there are a lot of companies we would like to felicitate, but the energy is going to be coming from you all. So I would request that whenever anybody comes on stage, please let's keep applauding for them, keep encouraging them. Yes? And we hand out these very, very special mementos, everyone. Hearty, hearty congratulations. Thank you so much. Now we invite HDFC Bank Limited. Can we have a huge round of applause for HDFC Bank Limited, everyone? At the same time, I request Bharti Airtel and State Bank of India representatives to please be next to the stage. In the interest of time, I request you to please be next to the stage. And that's our cue, everyone. The team is coming on stage, and it's such an honor to have all of them on this very stage. Now I invite Bharti Airtel. Everyone, let's give a huge round of applause for Bharti Airtel. I request the representatives of State Bank of India to please be on standby. Yes, that's our cue. Everybody, let's give a huge round of applause. I request State Bank of India and ICICI Bank Limited representatives to please be next to the stage. Thank you. Now I invite State Bank of India. Can we have a thunderous round of applause for them, please, as they come on stage and they receive mementos from our dignitaries. Thank you so much. Now we invite ICICI Bank Limited to please come on stage. Let's show some energy in the room, everyone. Let's give a roaring round of applause for them. I also request Tata Consultancy Services Limited and Bajaj Finance to please be on standby. The representatives, it's a kind request. Now we invite Tata Consultancy Services Limited on stage. Let's give a huge round of applause for them, please. At the same time, I request Bajaj Finance and Larsen & Toubro to please be on standby. The representatives, I request you to please be next to the stage. And here we have, as we facilitate, Tata Consultancy Services Limited. What an honor to have all of you over here. Thank you, ma'am. Now we invite Bajaj Finance to please come on stage. We have the representatives. Let's give a warm, warm welcome to them, everyone. I request Larsen & Toubro as well as Infosys Limited to please be on standby. Thank you so much, gentlemen. Now, let's give a warm welcome to and a huge round of applause for Larsen & Toubro. Everyone, I can't hear many applauses. Thank you. Very, very warm welcome to the whole team on stage. And that's our cue for an applause once again, everyone. Giving it up for Larsen & Toubro. Thank you so much. Now we would like to invite and let's give a huge round of applause for Infosys Limited. Let's give it up for them. A bigger round of applause, please, everybody. I also request Hindustan Unilever and Maruti Suzuki Limited to please be on standby next to the stage. And that's our cue. That's everyone. Let's keep applauding. Thank you so much, sir. Now let's give it up for Hindustan Unilever, everybody. Please, everyone, let's show some energy in the room. Let's keep applauding, keep encouraging people. It takes years and years of hard work to reach here. So let's show some appropriate applause for everyone. Thank you so much. Now we would like to invite Maruti Suzuki Limited. Can we give it up for Sir, please, who's coming on stage? I also request Sun Pharmaceutical and Mahindra Limited to please be on standby. As you can see, the memento is being presented, and that's our cue. Everyone, come on, let's have a bigger round of applause, please. Thank you. Now let's give it up for Sun Pharmaceutical Industries Limited. Ladies and gentlemen, I do understand there are a lot of people coming on stage and it's a lot of things to keep applauding for them, but let's show some appropriate energy for everyone. Please, come on, let's have a bigger round of applause. Thank you so much, sir. Now we invite Mahindra and Mahindra Limited. Can we give it up for them, please, as they come on stage? I request Axis Bank and Kotak Mahindra Bank to please be on standby. And meanwhile, we like to applaud for their hard work, their dedication. Thank you so much. It's time for us to put our hands together for Axis Bank. Come on, let's give it up for them. Very, very warm welcome to the whole team on stage. I request Kotak Mahindra Bank and ITC Limited to please be on standby. And that's our cue for an appropriate applause. Thank you so much. Now let's give it up for Kotak Mahindra Bank, everyone. Let's give and show our appreciation to them, their dedication and their perseverance. Very, very warm welcome to you, sir. And that's our cue to give it up for them. Thank you once again. Now let's put our hands together for ITC Limited. Very, very warm welcome to you, ma'am. I request Titan Company and NTPC representatives to please be on standby, and we give it up for ma'am over here. Thank you. Let's put our hands together and welcome Titan Company. Let's give it up for them, please, everyone. Very, very warm welcome to both of you. And that's our cue to appreciate them. Thank you so much. I would like to invite NTPC, but due to unavoidable commitment, NTPC representatives will not be present here. But at the same time, I request the relationship manager of NSE to please receive the memento on their behalf. Very, very warm welcome to you, ma'am. Can we still applaud, please, everyone? Yes, show our appreciation. I request HCL Technologies and Ultratech Cement Limited to please be on standby. And now it's time for us to applaud for HCL Technologies. Thank you so much, sir. Now we'd like to invite Ultratech Cement Limited. Let's give it up for sir, who's coming to receive the memento from our dignitaries. At the same time, I request Oil and Natural Gas Corporation Limited and Bharat Electronics Limited to please be on standby. And that's our cue, everyone, to applaud for them, please. Now it's time for us to invite Oil and Natural Gas Corporation Limited on stage. Their team is just walking up. So it's our cue to really do justice to their hard work, their perseverance as they are here to receive this memento from our dignitaries. And let's give it up for them. Come on, everyone. Thank you so much, gentlemen. Now we invite Bharat Electronics Limited to please come on stage and receive the mementos from our dignitaries. Very, very warm welcome to you. And it's time for us to applaud for them. I now invite Adani Ports and Special Economic Zone to please come on stage. Very, very warm welcome to you. At the same time, I request JSW Steel and Bajaj Finserv to please be on standby next to the stage. Ladies and gentlemen, it's time for us to give it up for Adani Ports and Special Economic Zone. A huge, huge round of applause as they receive memento from us. Hearty, hearty welcome to all of you. It's time for us to felicitate JSW Steel. Come on, let's give an appropriate round of applause as they walk on stage. Thank you so much. Now we invite and would like to felicitate Bajaj Finserv. Let's put our hands together, everyone, as Sir comes on stage to receive the memento from us. Thank you. Now I'd like to felicitate Power Grid Corporation of India Limited. Let's give it up for them. Let's have an applause, everyone. We'd like to felicitate Bajaj Auto Limited. Very warm welcome, ma'am. Let's give it up, everyone, for Bajaj Auto Limited. I request Coal India and Tata Steel Limited to please be on standby. And now it's time for us to applaud for Coal India. Let's give it up for Coal India, everyone. I request Tata Steel Limited and Nestle India Limited to please be on standby. Ladies and gentlemen, we are waiting for the applauses. Come on, everyone. Yes, let's fill in this room. And let's put our hands together for Tata Steel Limited. We have a wonderful team coming up on stage. Very, very warm welcome to you. As you can see, the memento is looking so nice. It's the Nifty50 index memento that we specially designed for today and looks absolutely wonderful. I request Nestle India and Adani Enterprises to please be on standby. Thank you so much. Now we invite and let's give it up for Nestle India Limited. Everyone, let's show our appreciation for them by applauding appropriately for them. Very, very warm welcome to both of you. Thank you so much. We now invite Adani Enterprises. Let's give it up for Adani Enterprises, everyone. Very, very warm welcome to all of you. I request Eternal Limited and Asian Paints to please be on standby. Let's show our thanks to them, please. Come on, by applauding. Thank you so much. Now, please put your hands together for Eternal Limited as they come on stage. Very, very warm welcome to you, sir. I request Asian Paints and Hindalco Industries to please be on standby. We invite Asian Paints representatives to please come on stage. Let's applaud. And now we invite Hindalco Industries to please come on stage. Yes, that's our cue. For a wonderful round of applause, everyone. Now let's give it up for Archer Motors. We'd like to felicitate them now. Archer Motors. Please put your hands together, ladies and gentlemen. I now invite Wipro Limited to please come on stage, the representatives to please grace the stage. At the same time, I request SBI Life Insurance Company Limited and Shriram Finance Limited to please be on standby. And now we're facilitating Wipro Limited, everyone. Thank you. Now we invite SBI Life Insurance Company Limited to please come on stage. Now we invite Shriram Finance Limited to please come on stage. Very, very warm welcome. I request Grasim Industries Interglobe Aviation Limited and Geo Financial Services Limited to please be on standby. Let's give it up, everyone. Now we invite Grasim Industries to please come on stage. I request Interglobe Aviation Limited, Geo Financial Services Limited, and HDFC Life Insurance Company Limited to please be on standby next to the stage right away. And let's give it up for them, everyone, please. Let's give it up for Interglobe Aviation Limited, everyone. I request Geo Financial Services Limited, HDFC Life Insurance Company Limited, Trent Limited to please be on standby. We now invite Geo Financial Services Limited to please come on stage, and let's give an appropriate round of applause for them as they grace the stage, ladies and gentlemen. Let's give it up for them, everyone. Now we invite HDFC Life Insurance Company Limited to please come on stage. At the same time, I request Trent Limited and Tech Mahindra and Tata Motors to please be on standby next to the stage right away. Let's give an appropriate round of applause, everyone. Time to invite Trent Limited to please come on stage. We invite the whole team to please grace the stage. I request Tech Mahindra, Tata Motors, Apollo Hospitals, and Tata Consumer Products to please be on standby next to the stage. Let's give it up for them, everyone. Come on. I'd like to felicitate Tech Mahindra. I request Tata Motors, Apollo Hospitals, and Tata Consumer Products to please be on standby right away. We now invite Tata Motors Passenger Vehicles Limited to please come on stage. We now invite Apollo Hospitals to please come on stage. Very, very warm welcome. I also request Tata Consumer Products, Dr. Reddy's Laboratories Limited, and Cipla Limited to please be on standby next to the stage right here. Let's give it up for them, ladies and gentlemen. We now invite Tata Consumer Products to please come on stage, the representatives. I request Dr. Reddy's Laboratories Limited and Cipla Limited to please be on standby. Now we invite Dr. Reddy's Laboratories Limited to please come on stage. We now invite Cipla Limited to please come on stage. Very, very warm welcome to you, sir. Let's give it up for him, please, everyone. I request Max Healthcare Institute Limited to please be on standby. Thank you. Now we invite Max Healthcare Institute Limited to please come on stage. Let's give it up for him, please, everyone. Thank you so much. Ladies and gentlemen, the next set of felicitation is of the asset management companies who have played a crucial role in expanding investor participation and making Nifty50 accessible to millions and millions through index funds and ETFs. Please help me in welcoming SBI Funds Management Limited. Let's give it up for them, please. I request UTI Asset Management Company Limited and Nippon India to please be on standby next to the stage. At the same time, request SBI Funds Management Limited to please come on stage right away. I now invite UTI Asset Management Company Limited to please come on stage. And I request Nippon India and ICICI Prudential Asset Management to please be on standby. Thank you. We now invite Nippon India Mutual Fund to please come on stage. Very warm welcome to you. I request ICICI Prudential Asset Management Company Limited, HDFC Asset Management Company Limited to please be on standby. Let's give it up for them, everyone. Please, let's show our appreciation to them. We would like to felicitate now ICICI Prudential Asset Management Company Limited. Request you please come on stage. At the same time, I request HDFC Asset Management Company Limited to please come on stage. I request Mirae Asset Investment Managers and Aditya Birla Sun Life Mutual Fund as well as Kotak Mahindra Mutual Fund to please be on standby right away next to the stage in the interest of time, please. Let's give it up for Mirae Asset Investment Managers India Limited. Thank you so much. Now we invite Aditya Birla Sun Life Mutual Fund to please come on stage. Very warm welcome to you. At the same time, I request Kotak Mahindra Mutual Fund and Navi Mutual Fund to please be next to the stage. Let's give it up for them, everyone. Please, as they're coming on stage. Let's give it up for Kotak Mahindra Mutual Fund. Very warm welcome to you. I request Navi Mutual Fund, Bandhan Mutual Fund and Tata Asset Management Limited to please be on standby right away. Thank you. Now we invite Navi Mutual Fund to please come on stage. Now we invite Bandhan Mutual Fund to please come on stage. Let's give it up for them, please, everyone. As Sir comes on stage to receive the memento. I request Tata Asset Management Limited and Axis Mutual Fund to please be on standby. It's time for us to give it up for Tata Asset Management Limited to please come on stage. And they're right there. Let's give it up for Axis Mutual Fund to please come on stage. I invite LIC Mutual Fund to please come on stage. I request DSP Asset Managers Private Limited to please grace the stage. I now invite Motilal Oswal Asset Management Company Limited to please come on stage. I now invite Franklin Templeton Asset Management India Private Limited to please grace the stage. Very warm welcome. Let's give it up for him, please. I also invite HSBC Asset Management India Private Limited now. I request Edelweiss Asset Management Limited and Bajaj Finserv to please be on standby. Now let's go down for Edelweiss Asset Management Limited. I also request Bajaj Finserv, Jio BlackRock and Invesco Asset Management to please be on standby right now. Time for us to give an appropriate round of applause for them, please. We now invite Bajaj Finserv Asset Management Limited to please come on stage. Very warm welcome to you, sir. I request Jio BlackRock, Invesco Asset Management, Quantum Mutual Fund to please be on standby. We now invite Geo BlackRock Asset Management to please come on stage. Very, very warm welcome to you, ma'am. At the same time, I request Invesco, Quantum Mutual Fund, Baroda, BNP Paribas to please be on standby. Now let's invite Invesco Asset Management India Private Limited to please come on stage. So very, very warm welcome to you, and we need an appropriate round of applause, everyone, as we have our wonderful representatives coming on stage to collect this wonderful token of gratitude from us. Now we invite Quantum Mutual Fund to please grace the stage. We now invite SBI Funds Management Limited to please come on stage. At the same time, I request Baroda, BNP Paribas, Angel One, Zerodha, and Grow to please be on standby next to the stage. Let's give it up for SBI Funds Management Limited, everyone. We now invite Baroda, BNP Paribas Asset Management India Private Limited to please come on stage. Very, very warm welcome to both of you. Thank you. We now invite Angel One Asset Management to please come on stage. At the same time, request Zerodha, Grow Asset Management, as well as Taurus Asset Management to please be on standby. The last few ones, ladies and gentlemen, let's give a nice applause for them as we invite them on stage. Let's give it up for Zerodha Mutual Fund. Let's put our hands together for them. We now invite Grow Asset Management Limited to please come on stage. Very, very warm welcome to the whole team. Thank you. We now invite Taurus Asset Management Company Limited to please come on stage. All right. Okay. So with that, in good intent, good faith, can we have a huge round of applause for all the wonderful companies we've felicitated and for our dignitaries as well. I request our dignitaries to please proceed towards the bull photo op. Thank you so much. And also let me tell you that our chief guest and guest of honor are also on their way. I request our dignitaries to please proceed towards the iconic bull of NSE. Let me tell you, we are moving towards a very, very important segment. Also, let me tell you that I request one representative each from Nifty50 companies to proceed towards the porch as we have a group photograph being taken. Everyone who is listening to me, only one representative from one company of Nifty50 index to please proceed towards the bull photo op, the mandatory photo op that we say. Only the Nifty50 companies in the first round. The next round we'll be having the AMCs. So in this round, I request the Nifty50 companies, one representative to go for the very, very important, the mandatory NSE bull photo op. And we also will be meeting our chief guest and guest of honor right there, waiting for you so you can take this iconic picture with them. And post this photograph, I request the AMCs, the asset management companies, to please be on standby, because then you will be going there with our dignitaries, our chief guest, a guest of honor, to be taking the picture after they have finished. Let me tell you what's happening outside. We have a wonderful bull photo op. It'll just take 5 to 10 minutes for this segment, so I request you to please patiently be here. As you can see, we have queued up outside for the NSE bull photo op. We're showing you the visuals as well of what's happening outside. Let me tell you, the NSE bull is a prominent symbol associated with the National Stock Exchange of India and represents the strength, the optimism, and growth of the Indian capital markets. And that's why we have every time, for all our guests, all our dignitaries, all the people who are special to us, we have this mandatory bull photo op as a token of gratitude and appreciation for you being present here with us to celebrate this momentous occasion right here at NSE. Let me also remind the asset management companies, the representatives of the AMCs to please be on standby, because post this picture, we'll be sending the representatives of AMCs outside at the porch for the bull photo op. Ladies and gentlemen, let me tell you, we have the mandatory bull photo op happening outside. I request the representatives of AMCs to please be on standby. As you can see outside, we have this iconic picture that's been taken. That is iconic NSE bell. As you can see outside, it's so wonderful as we celebrate this important milestone. I request everyone to please be seated right now. Let me tell you, the Nifty50 is the flagship equity index of the National Stock Exchange of India. It was launched in the year 1996. It represents the performance of 50 large liquid companies listed on the exchanges across key sectors of the Indian economy. I request the AMC representatives to please proceed towards the bull photo op. The asset management companies representatives, I request you to move towards the bull photo op that's happening right outside. Once again, all the AMC's representative, I request you to please proceed outside for the wonderful bull photo op that we are doing. Come on, everyone who is listening to me, the AMC's representatives. As you can see the visuals outside, this is such a proud moment, and we have our chief guest and guest of honor also waiting for us outside for this very, very iconic, this very important moment, the bull photo op, and that is the iconic NSE bell that you can see outside. It's equally prestigious, and we'll be having the bell ceremony also right here in this room. As you can see, Archie sir is directing them towards another photo op, I think. Yes, they are moving towards. Yes, the visuals will be shown to you. Let me tell you, ladies and gentlemen, the index covers, that is a Nifty50 index covers diverse sectors such as banking, information, technology, energy, consumer goods, pharmaceuticals, and automobiles. Because it represents the most influential and widely traded companies in the country, The Nifty50 is often used by investors, fund managers, and policy makers to gauge the overall health and direction of the Indian stock market. Not only that, the Nifty50 also serves as a benchmark for many mutual funds, exchange-traded funds as well. Once again, I request all the AMCs to please proceed towards the bull photo op. We'll be having all our dignitaries come back in the next 2 minutes, so I request you to quickly move out towards the bull photo op. All the AMCs who are listening to me, please don't miss this. I request you to please go out right now and take the opportunity of having this wonderful, this iconic bull photo op and NSE Bell photo op. Whoever's listening to me, our dignitaries are right outside. So all the AMCs who are listening to me, don't miss it. Please go right outside and be a part of the mandatory bull photo op. Everyone who's listening to me, I hope you are outside. The AMCs, the representatives of the asset management companies. Everyone who's listening to me, I hope you're there, you've taken the picture. I request all the guests who are walking inside to please take your seats right away because we'll be starting with the ceremony in the next 2 minutes. So everyone who's listening to me, all the guests who have walked in after the bull photo op, I can see the excitement, I can see the smiling faces, but I request you to please be seated right now as we'll be starting with our ceremony. We'll be continuing with our event. So everyone who's listening to me, please take your seats right away. Let me tell you that our chief guest and guest of honor will be walking in the room any minute now. So we will be wanting them to be seated, to be meeting you all. So everyone who's listening to me, take your seats right now, please. Once again, I request all of you to please be seated, and all the AMCs, the representatives of AMCs, please proceed outside for the bull photo op. I hope you're there, I'm not missing this chance. And everyone in the room, I do interest that we are very, very eager to meet each other. And as you can see outside, yes, we have the visuals from outside. We have the iconic NSE Bell. We have this wonderful picture taken. This is such a proud moment for all of us as we celebrate the milestone, the 30 years marking of Nifty50 index right here at the National Stock Exchange of India. There can't be a bigger, more wonderful, proud moment than right now for us. So everyone, I request you to please have an attention on the screens. Enjoy this wonderful, iconic moment that we all had. As you can see, they are going to come inside now any moment. So I request everyone to please be seated right now. Ladies and gentlemen, let me tell you that our dignitaries are just walking in. So I request all of you to take your seats right away. Everyone who's listening to me. Yeah, and then they will come up. Everyone, our dignitaries will be walking now. So I request everyone to please take your seats. Everyone, I request you to please be seated right away. Ladies and gentlemen, it's a very, very kind request. And as we have our chief guest and guest of honor, let's give a huge round of applause for our dignitaries as well, who are coming right in the room. Very, very warm welcome to our SEBI chairman, Shri Tuhin Kanta Pandey, and the public intellectual right and independent director of RBI, Shri S. Gurumurthy. Let's give it up for both of them. Chief guest and guest of honor, everyone. Let's have a roaring, roaring round of applause as they welcome us right here at the National Stock Exchange of India. Very, very warm welcome to both of you and to all our dignitaries. I request you please be seated. Very, very warm and heartfelt welcome once again to everyone. Ladies and gentlemen, as we have our dignitaries right here, and we have a guest also who have come back after this wonderful, this iconic bull photo op, what we'll do is we'll be continuing with our ceremony. We'll begin the formal proceedings with the national anthem. May I request everyone to please rise and shine for the anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल वंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you so much. I request everyone to please take your seats. Ladies and gentlemen, to mark the auspicious beginning of the formal ceremony, we will now have the traditional lighting of the ceremonial lamp. And I'll be inviting the dignitaries on stage. As a kind request to all the dignitaries who will be doing the lamp lighting ceremony, that post the lamp lighting, please take your seats on the dais. So ladies and gentlemen, let's put our hands together as I invite chief guest, the SEBI chairman, Shri Tuhin Kanta Pandey. Let's give it up for him, please. I now invite our guest of honor, Shri S. Gurumurthy, the public intellectual, right and independent director at RBI. Let's give it up for him, please. Let's keep the applauses going as I invite the NSE chairman, Shri Injeti Srinivas. Very, very warm welcome. We have here with us, and I would like to invite the MD and CEO of NSE, Shri Ashish Kumar Chauhan. Let's give it up for him as well. And please help me in welcoming the MD and CEO of NSE Indices Data and Cogensis, Shri Anirudh Chatterjee. Let's give it up for all our dignitaries, ladies and gentlemen.
वक्रतुण्ड महाकाय सूर्यकोटिः समप्रभ
वक्रतुण्ड महाकाय सूर्यकोटिः समप्रभ
निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा
निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा
Thank you so much. The dignitaries, I request you to please then be seated on the dais, all the dignitaries. Yes. Ladies and gentlemen, with this lamp lighting, we pray their prayers reach the Almighty, the fire within us, to be the best, to be the winner, and to succeed always, also burns very, very bright. Invoked blessings from the Almighty. And with that, we'll be having our dignitaries be coming on stage. Then we'll be proceeding forward. Once again, can we have a huge round of applause for our dignitaries as they grace the stage? Thank you once again. It is utmost honor to have all of you right here. Ladies and gentlemen, now, to formally welcome our distinguished guests, may now invite the chairman of the National Stock Exchange, Shri Injeti Srinivas. Let's give a huge round of applause for sir, please. Very, very warm welcome.
Shri Tuhin Kant Pandey, Chairperson of SEBI, Shri Gurumurthy, a thought leader and independent director of the Reserve Bank of India, Shri Ashish Chauhan, MD and CEO of NSE, and Shri Anirudh, MD of NSE Indices. It's indeed both an honor and privilege to deliver this welcome address and to invite both Shri Tuhin Kant Pandey and Shri Gurumurthy. We are very grateful that both of them have found time to grace this occasion. We are all here today to celebrate the 30th anniversary of the Nifty50. What started 3 decades ago as a scientifically derived benchmark of the health index of the Indian capital market has today been accepted as a synonym to India's performance, economic performance, and growth potential. It's also accepted as a global benchmark for measuring performance. When we talk about Nifty50 and appreciate what all it has achieved, how it has built the trust, the confidence, and the reliability, we'll have to go back again 30 years back, because Nifty50 also came just when NSE was an infant. NSE came in 1992. It actually became operational in 1994, and Nifty50 was established in 1996. At that time, the capital market was still at a very nascent stage, and the whole market cap could have been a few lakh crores, and Nifty50 accounted for about 40 to 50% of that, at say 1.5 lakh crore of rupees. And today it is beyond or over 200 lakh crores. Now, this growth is clearly reflective of the trust and confidence it has been able to generate. The most important thing is it's a dynamic index. It keeps changing as the character of our economy and structure of our economy changes. So what started initially with more traditional industries is today reflective of the change we have seen in this country post-economic liberalization. Today it is dominated more by technology companies. I consider banks also technology companies, and technology companies are technology companies. So if you really look at, of course, there are certain companies which are there then and they are there now also. So they are always there. But it is reflective of that structural change. It is now being accepted and tracked by many mutual funds, where they have the index funds, by exchange trade funds. It's become a sort of a market indicator, a market pulse. Over the last 30 years, it has gone up and down, but it has endured all the fluctuations, and its overall trajectory is only upwards. So that's very important, that market is very reactive, but if your fundamentals are strong, then there's nothing to worry. Regardless of whatever turbulence is there in the external environment, like we are facing some turbulence now also, and we find that it is immediately reflecting on the market. It's very important that the underlying companies, though we have 50 companies, I would say the larger ecosystem also we'll have to celebrate. These 50 companies are the face of Indian corporate sector, but there are so many other companies, a few thousands. All of them are contributing towards this growth and this journey. I would not drag my address because it's just supposed to be a welcome address, and we are all eagerly waiting to hear Mr. Pandey and Mr. Gurumurthy. But what I would say is that our vision, which the Prime Minister has set of Viksit Bharat, will again be highly dependent upon NSE as an institution and these economic indicators, which build the trust, the confidence, the resilience, the reliability. And I think it's very clear that again NSE as a technology company, it's again maybe a trading platform, but if you look at it very deeply, it's again a technology company. It has basically symbolized the transformation from a floor-based trading to a screen-based trading, and then you see how many features are there. Nationwide participation has become possible. All this is possible because of the digitalization. And we talk about a digital economy today, but its origins can be traced to 30 years back when we had this digital platform as a trading platform and no floor-based trading, and DMAT, the dematerialization of shares. So I think the story began there, and now we'll move on. I'm sure the new trends of artificial intelligence and so the way things are changing, the way technology is getting redefined, all of this also will be captured in the Nifty 50 because the composition is dynamic and it will always be hopefully moving upward and supporting the growth ambitions of this country by enabling capital formation, good price discovery, and efficient allocation of capital. Thank you.
Thank you so much, sir, for addressing this August gathering. Ladies and gentlemen, now I'll be having a look at a couple of videos that is being played to do this wonderful, occasion some justice. We have here with us the videos of NSE Nifty 50 video, as well as it'll be followed by testimonial video of Nifty 50 companies and market participants. Let's have a look.
We're in the midst of a quiet revolution, a world of manual trade, physical certificates, and significant information asymmetry. It was a market built on legacy rather than logic. India was ready to grow, but its financial infrastructure was a bottleneck. 1992 changed the stakes forever. Economic liberalization kicked the doors open. Suddenly, the world's eyes were on India. But you can't build a modern economy on interest alone. The markets needed a financial soul, an unbiased, scientific benchmark that could withstand this newfound scrutiny. The mission was absolute: give India's markets a scientific spine. We began with a stopgap arrangement, the NSE 100 in 1994, which was always meant to be replaced by a more scientific effort. In India up to this point, the existing indices were not trustworthy. The derivatives market required a new index, which was both a constraint and an opportunity. A first-of-its-kind index in the world which has been designed for use in financial products. An index committee was formed, bringing together the nation's premier academic minds and economists. Their task? To not just create a list of companies for us, but to create a methodology for index creation and maintenance. Around 10 trillion floating point calculations later, we were ready to talk about the new NSE index. 50 liquid securities were thought to be reliably available, and the gains in terms of hedging effectiveness obtained by going beyond 50 securities were known to be quite minimal. In 1996, the Nifty 50 was born. It wasn't just a ticker or tracker. It was meant to be the financial soul of India's capital markets. Designed with massive ambitions, with a launch market cap of 1,68,480 crore rupees, built to be the definitive measure of a rising nation's economic leadership. Through selection of stocks based on a transparent framework, leaving no scope for human discretion, the Nifty 50 became India's market benchmark to trust in. These 11 companies have been a constant in the index since inception. The Nifty 50 currently has exposure to 15 sectors. The weights of sectors have changed over time due to evolving market dynamics. This evolving sectoral composition mirrors India's growth story. A new era for the Nifty 50 was launched in 2000 with the index derivatives based on Nifty 50, adding a further layer of risk management and market sophistication. Over the years, the Nifty 50 became the backbone of India's futures and options market and a trusted indicator for global investors. The Nifty 50 has witnessed major global and domestic shifts over the years. Through volatility and resilience, the index has evolved. Since inception, Nifty 50 Total Return Index has delivered a 12.79% CAGR. From a total market cap of 1,68,480 crores at launch, the Nifty 50 has grown to a market cap of 201 lakh crore rupees as of February 2026. Alongside this rise, the National Stock Exchange has grown in its own right, from a total market cap of 4,1,459 crores rupees in March 1996 to approximately 462 lakh crore rupees in February 2026. As of December 2025, 46 domestic passive funds, 21 ETF and 25 index funds track this index with a total AUM of approximately 5 trillion rupees, joined by 23 international funds with a total AUM of US dollars approximately 3.9 billion. This highlights the Nifty 50's acceptance as a preferred benchmark in the Indian equity market. By August 1st, 2024, the Nifty 50 crossed the 25,000 mark and further peaked at 25,938 in December 2025. The journey of Nifty 50 is the journey of India. For 30 years, it has matched the energy and ambition of a rising India, enabling the dreams of 1.4 billion people, and the journey continues. Nifty 50, an investment called India.
Ladies and gentlemen, now I'll be playing the testimonial video of Nifty 50 companies and market participants. Let's have a look.
Congratulations to the National Stock Exchange and NSE indices on completing and marking the occasion of 30 years of the Nifty 50 index. I think the Nifty 50 is not merely the pulse of the nation, it tells the story of the markets, it describes the journey of its businesses and entrepreneurs who make up that market, and at the same time it serves as a temperature check and pulse. I think today the family of NSE indices covers every aspect of the Indian market, be it by market cap, be it by factors, and provides investors with an excellent set of tools with which they can judge how the market is evolving, and they can also use it for their capital allocation decisions. We at UTI Mutual Fund are proud to have partnered with NSE indices. Our Nifty 50 index fund, which is the oldest in its category, celebrated 25 years of its existence last year, and we look forward to a continued journey along with NSE indices and the Nifty 50 to tell the story of India and to be the narrator of the journey to a Viksit Bharat. Thank you and best wishes to all of you.
Hearty congratulations to the National Stock Exchange on completing 30 remarkable years of Nifty 50. Over the past 3 decades, Nifty 50 has grown from a benchmark index into a defining pillar of India's capital markets. It stands today not only as the country's most tracked index, but also as a global reference point, reflecting India's strength, resilience, and evolving leadership of India's foremost companies. Beyond measuring markets, the Nifty 50 has quietly shaped the investment landscape, enabling transparent price discovery and supporting the growth of mutual funds, index strategies, ETFs, derivatives, and increasing global participation. In doing so, it has contributed meaningfully to deepening investor confidence and broadening market participation. Warm wishes to the entire NSE team on this important milestone. Your commitment over the years has helped build an institution that truly mirrors India's growth aspirations. I wish you continued success as you scale new milestones in the years ahead. Thank you. God bless you.
Heartiest congratulations on 30 remarkable years of the Nifty 50, a milestone that is not just about longevity, but also about leadership in shaping India's capital markets and enabling the wealth creation journey for millions. Launched in 1996 by the National Stock Exchange of India, the Nifty 50 has come to represent far more than an index. It is a barometer of India's economic momentum, a reflection of corporate discipline, and a powerful signal of the country's growing global relevance. Over the last 3 decades, it's tracked the aspirations and performance of India's most influential enterprises, mirroring our evolution into one of the world's most dynamic and resilient economies. Through cycles of volatility, global disruptions, technological shifts, and reform-led transitions, the index has demonstrated both strength and adaptability. It has provided institutions with a credible benchmark, investors with confidence, and entrepreneurs with inspiration. In many ways, the Nifty 50's journey runs parallel to the story of modern India. Ambitious, reform-oriented, and forward-looking. We take particular pride in celebrating this milestone, with Kotak Mahindra Bank being part of the index. Our inclusion reflects a shared commitment to performance, governance, and long-term value creation. It is an honor and equally a responsibility to stand alongside India's leading companies. That responsibility strengthens our resolve to innovate continuously, uphold the highest standards of stewardship, and remain deeply customer-centric in our growth. As we mark 3 decades of this iconic benchmark, we also acknowledge the foresight of regulators, the integrity of market institutions, and the trust of investors who have together built a transparent and vibrant ecosystem. 30 years is a moment to celebrate. It is also a reminder that India's capital markets are still early in their full potential. The next decade will demand scale, technology leadership, and global competitiveness. And I'm confident that our markets and the companies within them are ready. Here's to resilience, credibility, and enduring prosperity, and to the next chapter of India's growth story. Congratulations, and thank you so much.
Hello everyone, I am Hemant Kadel, Chief Financial Officer of Grasim Industries Limited, a Aditya Birla Group flagship company. I congratulate National Stock Exchange of India on the 30th anniversary of the Nifty 50 index. Over the past 3 decades, the Nifty 50 has evolved into a trusted benchmark for India's equity markets, reflecting the strength, resilience, and ambition of Indian industries. This milestone also marks an important chapter in India's capital market journey of deepening participation, strengthening transparency, and supporting long-term wealth creation for investors. At Grasim Industries, we are proud to be part of Nifty 50. For us, it is both a recognition of work done by our stakeholders and a reminder of the responsibility that comes with being among leading listed companies. Again, I congratulate NSE on this remarkable journey, and Grasim continues to look forward, continuing to contribute to India's growth story in the decades ahead. Thank you very much.
Many congratulations on completing 30 years of Nifty 50 index. The index has been a symbol of India's growth story, resilience, and aspirations. It's been a guiding compass for a lot of wealth creators and for wealth creation as well. As the index, it represents both challenge and opportunity. It inspires confidence among investors that markets are going to be regulated. If we follow a disciplined approach, there is a lot of scope that we will create wealth. It's been the benchmark that a lot of financial professionals follow, and in the past 30 years it's only grown and evolved. As we move ahead in time, we would want to track the benchmark which we do domestically and globally as well. So wishing NSE continued success and empowering investors for the time ahead.
Those were some wonderful videos, encapsulating a journey of Nifty 50 index and its success. Ladies and gentlemen, moving forward, I'll be inviting our next speaker. He's going to throw light on market economy versus market society. Ladies and gentlemen, we have here with us a distinguished corporate advisor, investigative journalist, and strategic thinker. Inspired by Mahaswami Kanchi Periyavaji and beginning his career as a chartered accountant, he became a close associate of Ramnath Goenka of the Indian Express. He played a very pivotal role in landmark investigative journalism that shaped public discourse in India. He serves on the Central Board of the Reserve Bank of India as an independent director. His contributions continue to influence debates on governance, economics, and India-centric development. Ladies and gentlemen, it gives me immense pleasure to invite our distinguished guest of honor, Shri S. Gurumurthy. Let's give a roaring round of applause for him, please. Very warm welcome, sir.
Mr. Tuhin Pandey, Mr. Injetti Srinivas, and Mr. Ashish Chavan, who has been instrumental in bringing me here. In fact, actually, I was to address the next session as the main session. I have been added here. So you have to bear with me for the next 10-12 minutes as to what I am going to talk, whether it has relevance to what we call as the market or not. That you will decide after I complete my speech. And Mr. Anirudh Chatterjee, and namaskarams to all of you. See, beginning as a corporate advisor and someone who has been looking at the entire business, financial, legal, stock market with a critical eye 40 years back. Now I look back and see the huge development that has taken place. In those days, manipulation of stock market was a day-to-day affair. Now it takes place once in 2 years or 3 years. That's the difference. But manipulations do take place, and no amount of regulation can handle this because the manipulation is at a totally different level. We all talk about market. Now, market means financial market, and in financial market, market means stock market. Commodity markets have virtually disappeared from the understanding of a real economy. So I would like to place before you a debate which started with globalization, particularly with financial globalization, in the late 1990s. And in 2006, it was brought to the fore by Boston Consulting about the distinction between what we call as the market economy and market society. They said, for example, he compared the Anglo-Saxon economies and the rest of the Occidental Europe and said, the Occidental Europe is actually market economy, but these Anglo-Saxon economies are market societies. In fact, most people did not notice this difference at all till the 2008 crisis came. In the 2008 crisis only, this whole thing exploded. And unless we study the causes and the consequences of the 2008 crisis, we will not be able to understand how markets today are not really functioning on the basis of the real economy, and they do not reflect the real economic factors that go to make up what is known as the growth and development of a society. I'll just give you a small example. From 1976 till today, America has run a current account deficit of $26 trillion. And it was continuously incurring current account deficits. In 2006, when the dollar was peaking as the most sought after and admired currency, today it is the most enforced currency. Trump says if you move away from dollar, this was never the dollar. Dollar was admired at that time. So a question came, how a country which keeps on running current account deficits, which according to the principles of economics must mean that its currency values must go down. The way it had incurred current account deficits, the dollar value must have become 1/3 of what it was in 1976, but it increased by 3 times, 3x. How is it? Two Harvard economists, of course their names are very difficult to pronounce, so two Harvard economists came out with a fantastic explanation. I don't think that has ever been studied in Indian economic schools. I have been addressing many economic schools, IIT management and other management institutes and Madras School of Economics. I don't think this has been studied. It is very necessary to study this. So the question posed was, how is it that with continuously running current account deficits, instead of the dollar value falling, it is rising, not only rising, it is rising by 3x. So these two economists came out with this fantastic explanation that the American economy doesn't function on economic laws. It functions on the laws of physics. What are the laws of physics? The laws of physics says that the whole universe is held together by a dark matter. No one knows what is the dark matter, except that the dark matter is what sustains the universe. And so the universe of the global economy, global financial order, global stock markets are held together by the dark matter which is called America. That is the insurance that America provides for the financial investors into America. This was the simple explanation they gave. So America is not bound by the laws of economics. Only others are bound by the laws of economics. You must understand the difference between a country which decided at least virtually the fate of the rest of the world economy, not subject to economic laws. This was tested in 2008. And when this crisis came in 2008, then people began inquiring into what is it that has brought about this crisis. And in 2009, the Economist magazine came out with a cover story which showed the macroeconomic textbook melting away. The entire macroeconomic theories which guided the world from 1992 particularly, in 2009, it was called the collapse of the macroeconomic theories. And the editorial said that economists were celebrated more than the politicians. If Alan Greenspan died, then we have to put a glass on his face and put him on the US Federal Reserve System so that his dead body continues to be the US Federal Reserve chief. And that is the importance of that man. That is how he was called the god of money. This was the extent to which economists were trusted. And the Economist magazine pronounced the death of macroeconomics. And Paul Krugman, who got the Nobel Prize in 2009, he said that much of the macroeconomic theories which were developed for the last 30 years were useless at best and harmful at worst. And economists began fighting like it was like a street fight. Then came the economist with a beautiful cover story again. When the trillions of dollars were being pumped into the American economy, it was not rising. But the Asian economies were rising. And they particularly noted the Japanese economy, which is somewhat comparable to the Western economies in many sense. So they said, how is it that the Japanese economy is rising and we have put trillions of dollars? The Japanese economy has not put that kind of money into the government, has not put that kind of money into the market, but it is rising. So the Economist magazine came out with the answer that unlike the American economy, which is generally the Anglo-Saxon economies, the Japanese economy is only a market economy. It is not a market society. Market society means that everything is up for sale and buy. In fact, this is beautifully explained by a political philosopher of Harvard University. How the space in your forehead becomes place for advertisements. It can be a temporary place for advertisement, or you can put it permanently also, and for which the amount of money to be paid will change. It will be higher. If you want the telephone number of your doctor, mobile phone, you will have to pay X amount. If you can call him on a Saturday or Sunday, it has to be a higher amount. If you have to call him at midnight, it will be still higher amount. This is how the entire human society, its relation-based approach. There is no relation. There is no neighbor. There is no client. This entire thing getting transformed into complete transactions and price determination, as you call it, is market society. And all market societies are facing crisis today. It is only market economies which function with societies, which give space to human life, human behavior, human relationships. It is that which is not facing crisis. So there is a serious question about market societies becoming and replacing market economies. Because we are all functioning as market. We must know what is, I would like you to study, I don't want to take you more, it is an article written in 212 by Michael Sandel, who teaches political philosophy in Harvard University. It's one of the finest pieces, which as a society which functions with market, like India, like most of the Asian societies, we have not allowed market to replace the society. This is a very important factor. If you allow the market to replace the society, our GDP growth will be 15%. It will not be 8%. Because we have transactionalized the entire society. This is a huge discourse which is needed because its consequences are very dangerous. The intergenerational obligations of the American families were taken over in 1960 by universal social security. It yielded enormous amount of money into the social security system because there was baby booming in America. But from 2006, when the population stabilized and began declining, the withdrawals from the social security account became more than the deposits into it. Today, the current value of the future social security obligations, if it is reduced to the present day value, it is $72 trillion, which is more than twice the GDP of America. It has replaced the intergenerational moral obligations of the people and transactionalized it. This is market society. So all of you are concerned not only with market, you are also concerned with the economy. Indian economic strength is not reflected in the market capitalization of India or even in the day-to-day fluctuations of the Indian stock market, because the Indian stock market is driven by inflow and outflow of funds. It is not by the real strength of the Indian economy. So I think all of us will have to, because as India is rising and the whole world is in turmoil, what kind of consequences we will be exposed to. Ultimately, it is the society's strength that will decide the economy and not the day-to-day fluctuations in any market for that matter. Thank you very much.
Thank you so much, sir, for sharing your valuable insights with us. Can we have once again a huge round of applause for sir, please, as he shared some wonderful, wonderful stories with us. Ladies and gentlemen, now it gives me immense, immense pleasure to invite forward our chief guest, the chairman of SEBI, Shri Tuhin Kanta Pandey. Can we have a huge round of applause for him, please?
Shri Swaminathan Gurumurthy ji, Independent Director RBI, Shri Injeti Srinivas, Chairman NSE, Shri Ashish Kumar Chauhan, MD and CEO NSE, Shri Anirudh Chatterjee, MD NSE Indices, distinguished guests, industry professionals, ladies and gentlemen, a very good evening to all of you. When I tried to open my iPad, there was a thud. It just slipped out of my hand and there was a thud. I think Mr. Gurumurthy created a thud in the gathering today. I can see the silence. So we are used to traditional way of deliberations. And for a while, it felt it was an academic brainstorm in which Mr. Gurumurthy was really thought-provokingly cajoling us to look at some different way that we look at market economies and market societies. So my first of all, huge congratulations to Mr. Gurumurthy to stir the whole audience into a bit of a silence and, doubting, whether all that indices we are talking about today are worth relevance or we should really look at it some other kind of indices which truly, reflect the market economies as he calls it and not market societies. But I will stick for a change to the traditional. As a regulator, I also have my limitations to not to really be so thought-provoking as to really make the markets wonder whether, I'm right fit for purpose for this job. So I will leave it for some other, I would say, confidential discussion, and maybe with Mr. Gurumurthy we'll have a further discussion on the matter. But today, I want to say it's a pleasure to join you today as we celebrate 30 years of Nifty50 index. Occasions like this are not merely about marking a number or a milestone. They offer us an opportunity to reflect on a journey, the journey of institutions, markets, and investors. Over the last 3 decades, Nifty has become one of the most widely tracked indicators of India's market. For investors, it's a benchmark. For market participants, it's a reference point. And for many observers of the economy, it's a window into the evolving story of the Indian enterprise. In many ways, therefore, the story of Nifty is closely intertwined with the story of India's capital markets. We are also meeting at a time when global markets are experiencing tremors of turbulence and volatility arising from Middle East war, choking off vital shipping lines and triggering oil and gas supply shocks as well as supply as well as price shocks. Like rest of the globe, India too is deeply impacted by such developments. Yet, amid such uncertainties, India's domestic fundamentals have continued to remain strong, providing resilience. It's important not to panic at this moment, but to remain calm amidst the storm. The Nifty itself has navigated several such phases in the past 30 years, periods of uncertainty, volatility, and global shocks. And yet, over the long run, it has continued to reflect the strength and resilience of India's growth story. To appreciate the significance of the Nifty 50, it is useful to recall the period in which it emerged. The mid-1990s were a defining phase for India's financial markets. The country was in the early years of economic liberalization. Financial sector reforms were gaining momentum. Institutions were being built to support a more transparent and efficient market system. One of the most significant developments during that period was the establishment of National Stock Exchange itself. The NSE introduced a new paradigm to market infrastructure, technology-driven trading, nationwide access, transparent order matching, and modern risk management systems. It marked a decisive shift from traditional floor-based trading to a fully electronic market structure. It was in this context that the Nifty 50 index was launched in 1996. Designed as a transparent and rule-based benchmark, it represented leading companies across key sectors of the economy. Over time, the index grew alongside the broader transformation of India's securities market architecture. As India's economy expanded and diversified, the composition and performance of the Nifty reflected these changes. Over the last 3 decades, we have witnessed the rise of new industries and the expansion of existing ones, from information technology and financial services to telecommunications, consumption-driven businesses, and several new age sectors. The sectoral composition of the Nifty itself illustrates this transformation. When the index was launched in FY 96, sectors such as IT and communication services had virtually no presence in the index. Today, together, they account for about 13.5% of the Nifty's weight. The financial sector has expanded significantly, with its weight increasing from around 21% at the time of launch to about 38% as at end of February 2025. At the same time, the growth of the broader market ecosystem has been equally remarkable. India today has over 140 million unique investors, reflecting a steady shift of household savings towards capital markets. The market capitalization of companies listed on NSE now exceeds 130% of GDP, compared with around 35% in FY 95. Individuals and domestic mutual funds together now hold about 36% of the free float market capitalization of Nifty 50 companies. The strength of India's market infrastructure has also played a vital role in this journey. Today, India's exchanges rank among the most active globally. Our markets host one of the largest number of listed companies, facilitate a very large number of IPOs each year, and account for one of the highest volumes of derivative contracts traded worldwide. India has also emerged as a major global market in terms of efficiency, with faster settlement cycles and shorter listing timelines. An important feature of our market ecosystem is that while exchanges compete with each other, they also collaborate when it comes to strengthening system-wide resilience. Initiatives such as common contract notes, interoperability across exchanges, clearing corporations, and the creation of alternate trading arrangements reflect this collaborative approach. These developments reflect a deeper and more mature market ecosystem. While the Nifty was originally introduced as a benchmark index, its role has expanded considerably over time. Today, it serves as a central reference point for institutional investors, mutual funds, and portfolio managers. Since its inception, Nifty50 has increased around 25-fold, delivering a compound annual growth rate of over 12%. More than 40 exchange-traded funds and index funds track the Nifty50 index, providing investors with simple and cost-effective ways to participate in equity markets. Nifty50 constituent companies today account for around 44% of the total market capitalization of all listed companies, highlighting their significance in India's corporate landscape. At the same time, derivative products based on the index have become important instruments for price discovery and risk management. These developments have transformed the Nifty from merely a measurement tool into a core component of the capital market ecosystem. Market growth of this nature requires strong institutions and a robust regulatory framework. Over the past 3 decades, India's securities market has seen the steady strengthening of its institutional pillars: exchanges, clearing corporations, depositories, and intermediaries. Regulatory frameworks have evolved continuously to support the expansion of markets while safeguarding their integrity. Key areas such as market surveillance systems, clearing and settlement mechanisms, and risk management practices have been strengthened over time. Our objective is clear: to enable innovation and growth while preserving market integrity and investor confidence. In this direction, we have introduced several measures to strengthen governance and oversight of market infrastructure institutions, called MIIs. We have mandated external independent performance evaluations of MIIs and their statutory committees. We have used governance guidelines to strengthen board oversight, including norms relating to the appointment of key directors and clearer reporting lines for key management personnel. Boards of listed companies are being nudged from ceremonial oversight to active stewardship. We have set up a high-level expert working group to develop a short-term and long-term strategic technology roadmap for the securities market ecosystem. Technology is increasingly central to both market functioning and regulation. At SEBI, we are strengthening our supervisory capabilities through internally developed tools such as SEBI Sudarshan, a real-time scanner for surveillance of unauthorized digital activity, and SEBI Radar, an AI-driven system for reviewing advertisements. We are also deploying analytical tools to conduct sentiment analysis of corporate announcements. At the same time, exchanges and other market institutions must continue to invest in technology infrastructure, cyber resilience, and advanced risk management system. While today's occasion invites reflection on the past, it also encourages us to look ahead. India's economy is evolving rapidly. New sectors are emerging, driven by technology, digital innovation, advanced manufacturing, and the green transition. The next generation of companies that shape our markets may come from industries that are still at an early stage today. As India's economy continues to grow and integrate with global financial systems, our markets will also become larger and more complex. This will create new opportunities, but also new responsibilities. In this evolving landscape, the role of regulators and market institutions becomes even more important. So as we celebrate 3 decades of Nifty 50, we are not just marking the history of an index. We are recognizing a broader journey, the journey of India's capital markets and institutions that support them. Over these 30 years, the Nifty has become a mirror of corporate India, a barometer of investor sentiment, and a compass for the direction of our markets. This journey has been made possible by the collective efforts of many stakeholders, exchanges, regulators, intermediaries, market institutions, and millions of investors. I congratulate all of them for contributing to the evolution of India's capital markets. If the past decades were about building strong market foundations, the decades ahead will be about deepening participation, strengthening resilience, and expanding opportunities. And I am confident that Nifty will continue to remain an important anchor in this journey. Thank you very much. Jai Hind.
Thank you so much, sir, for sharing those words of wisdom with us that resonated with everyone in the room. Can we once again have a huge round of applause for sir, please? It's such an honor to have him over here. Ladies and gentlemen, moving forward, as a token of our gratitude, may I now request Shri Ashish Kumar Chauhan, MD and CEO of NSE, to kindly felicitate our guest. We would like to felicitate Shri Tuhin Kanta Pandey, sir. I request both of you to please come forward. I would like to felicitate you with a very, very special memento that's specially designed for today's momentous occasion, which is the Nifty 50 index memento that we have specially designed. We would now like to felicitate Shri S. Gurumurthy. We'd like to felicitate sir now. This very, very special memento. And with that, I request all the dignitaries to please come forward for the very, very special launch. I request both the gentlemen as well, our chief guest and guest of honor. So I request you to please come forward, as now we'll be doing a launch. Ladies and gentlemen, let me tell you, we are going to witness the launch of 2 important commemorative initiatives. So now we'll be starting with our first launch. Ladies and gentlemen, we have here with us the Nifty 50 white paper, 30 years of India's market evolution. This is brought out by the NSE Indices team. And here we go. Let's have a thunderous round of applause as we launch the Nifty 50 white paper on this very, very important occasion. And with that, moving forward, we'll be doing our next launch. Let's have once again a huge round of applause. And we'll be doing our next launch, which is the Nifty Panorama book, authored by Shri Urvish Kantaria. Presenting the book so it can be unveiled by our dignitaries on stage. Very, very warm welcome to you, sir. We have the author writer with us. Let's give it up for Shri Urvish Kantaria as well, please. Very, very warm welcome to you. And here we officially launched the Nifty Panorama book. so much to all the dignitaries for doing the honors. Request you to please take your seats. And thank you, sir, for joining us. Ladies and gentlemen, with those two wonderful launches, we move forward. Let me tell you that as we come to the close of this memorable evening, now may I request Shri Ashish Kumar Chauhan, the MD and CEO of NSE, to please deliver the vote of thanks. So very, very warm welcome.
Good evening, everyone. As we come to close of this evening's program, it's a privilege to propose the vote of thanks on the occasion of the 30th anniversary of the launch of Nifty50 index. Today's gathering has been a fitting commemoration of an important milestone in the evolution of Indian capital markets. Over the past 3 decades, the Nifty50 has come to occupy a distinct place in the country's financial architecture and a day-to-day life. More than a market benchmark, it has served as a reflection of India's economic progress, corporate dynamism, job creation, and the steady broadening of investor participation. The journey of the Nifty50 also reflects the resilience of India's markets ecosystem over time. From its base value of 1,000 on November 3, 1995, the index rose to all-time high levels, about 26,300 in January 26. November 3, 1995 is an interesting date because November 3, 1994 is when NSE started its equities market, and when we wanted to launch the Nifty index, we were figuring out which date should be taken as the base date, and we said it will be for time to come, that date will be remembered November 3, and that's why to commemorate 1 year of NSE starting equities, we thought November 3, 1995 would be the ideal date. That's how it was selected. And in this 30 years, India has passed through periods of significant stress, including the pandemic-led decline to 7,610 in March 2020. Across these phases, it has remained a credible and enduring barometer of the country's listed corporate sector, capturing both continuity and change in India's growth story. The Nifty50 has over the years emerged as a transparent and trusted benchmark for investors, institutions, and market participants. Its continued relevance reflects the strength of India's market institutions, the depth of its corporate sector, and the confidence it continues to inspire across the financial ecosystem. On behalf of the National Stock Exchange, I would like to express our sincere gratitude to the Honorable Chairman SEBI, Shri Tuhin Kanta Pandeyji, who graciously came for this event and also gave confidence that if India has to grow, it will grow on the back of NSE. Thank you, sir, for coming here today and gracing this occasion. And to our guest of honor, Shri S. Gurumurthy, for gracing this occasion and opening our eyes to the fact that markets are an instrument for helping the society and not becoming master of the society. So, sir, we take this suggestion to the heart. We'll work on this and we'll continue to keep ourselves honest to ensure that our markets in India continue to reflect the society's aspirations and help the society gain more material advantage as well as spiritual advantage going forward. I would also like to acknowledge the senior SEBI officials present this evening for their continued contribution to strengthening market integrity and investor protection. I further extend our sincere gratitude to our Honorable Chairman, Sri Srinivas Injati, for his presence and guidance this evening. We would also like to acknowledge the continued contribution of the leaders of the Nifty50 companies to the development of India's corporate and market ecosystem through the building of strong institutions, adherence to high standards of governance, and the creation of long-term value. They have played an important role in strengthening the depth and credibility of India's capital markets. We are also grateful to the distinguished corporate leaders, heads of asset management companies, the market infrastructure institutions, especially the CEO all the CEOs of MIIs who have come here today, as well as market participants. Many of our leading brokers have come from across India to mark this special occasion for their contributions to the development of India's capital markets. We are also immensely thankful to the AKR Associates, represented this evening by Sri Rohit Rajarshi, Sri Ramasamy Meriyappan, and Sri Ankur Kashyap. And we also acknowledge with gratitude Managing Partner Sri Ajit Ranganathan, who is unable to be present on this occasion, for his continued support. We are also grateful to our friends in the media who are present this evening for their continued support and cooperation. We'd like to acknowledge all the colleagues and teams whose efforts have gone into planning and organizing this event with great care and professionalism. Sri Urvish Kantaria, who wrote this book, Nifty Panorama, needs a special mention. With that, I once again thank all of you for being with us this evening and for contributing to the continued strength and development of India's capital markets. Thank you. Jai Hind.
Thank you so much, sir, presenting the vote of thanks. Ladies and gentlemen, we are inching towards a very, very beautiful tradition. Let me tell you, this is one of the most symbolic moments in the journey of financial markets, which is ringing of the exchange bell, which is the iconic NSE bell. I request the dignitaries to please come forward. We'll clear the tables and chair, and so we'll be ready for this wonderful bell ringing ceremony. I also invite the CBDO of NSE, Shri Ramakrishnan sir, to please join them on stage. Can we have a huge round of applause for Shri Ramakrishnan sir as well? Ladies and gentlemen, let me tell you that to commemorate 30 years of the Nifty50 index, we'll be having the ringing of this iconic NSE bell. So we want equal energy from everyone. This is the final segment of the events, and we want to, not bring the roof down literally, but have a lot of energy in the room before we conclude this wonderful event. So as you can see, our dignitaries are all set. They just need some energy from us, some happiness, some roaring from us. All right, so with that, we'll be starting with the bell ringing. Okay, so, and here we have our dignitaries all set. Everyone, come on. Can we give a huge round of applause as we do this wonderful tradition here to celebrate 30 years of Nifty50 index right here at the National Stock Exchange of India by ringing this wonderful, traditional, iconic NSE bell. Keep the applauses going once again, ladies and gentlemen, as we mark this wonderful, momentous occasion with our dignitaries right here. We would like to present our heartfelt congratulations to everyone involved with this wonderful occasion. It has truly been one of the most memorable days. And with that, we thank our dignitaries as well. Can we have a huge round of applause for our dignitaries? It is really an honor to have them here for this wonderful, this important occasion. Thank you so very much. Thank you. Ladies and gentlemen, with that, let me tell you, thank you for being part of this historic celebration. Also, we have served a high tea in the F&B area. Please don't forget to enjoy the high tea that's been served there. Also, we have our token of gratitude. We are presenting that next to the exit. So all the guests, please don't forget to take a small token of gratitude from the National Stock Exchange of India before you leave. Also, as you can see on the screen, this is a very important thing. We have the QR code. All the wonderful pictures and memories that we created today have been uploaded through this link. You can just access to that on this link. So come on, everyone who's listening to me, you can click the picture, then you can, of course, do this later on. But don't forget to take the pictures, download it from this link. It has all the wonderful moments that we have captured here together at this wonderful celebration. Also, once again, the high tea is served in the F&B area, which is left to your side. So please go there and enjoy the high tea. At the same time, we are giving a small token of appreciation from the NSE. So don't forget to take that. We've designed that specially for you today. So please don't forget to collect your token of gratitude before you exit. Thank you so much and have a great evening ahead. Also, one more last important thing. We have another event starting at 7 p.m. So I request you to please be here if you want to attend that. That's again going to be a very, very invigorating event. So if you wish to attend it, you can be here at 6:45 because you'll be starting at 7 p.m. sharp. Thank you so much. Have a great evening ahead. Thank you.